morning, guys. It's Phil Henry with Phil Henry Financial Advising. Just wanted to talk about what a crazy week we had last week and give you guys a big picture on an upset of conventional wisdom and, as you just heard Stevie Wonder, superstition. Actually, news from the election this past week wasn't great. It was huge, as Donald Trump will say, as he defeated Hillary Clinton by way of the electoral vote. In turn, the Republicans retained control of the House and the Senate. And I know that we've heard enough about election, especially on our social media, Facebook, Twitter, Instagram. It's getting crazy. I just want to talk about the market reaction that occurred the next day. When it became apparent that an upset in conventional wisdom was in the making, the Dow future tumbled as many as 800 points. By the time the market closed on November 9th, the Dow was up 257 points, the S&P was up 24 points, and the NASDAQ was up about 20 points. Wow. It was a surprise to some, just like the election outcome. Why did the market rally like this? Initially, I would say it's because the Chicago Cubs, go Cubs, won the World Series. We'll get back to that. But why really did the market rally like this? I believe it was short covering activity or buying back into borrowed securities to avoid a loss. 2, bandwagon trading or emotionally driven traders that just went into the market and started buying funds. There was an extremely strong showing in healthcare, bank, biotech, and pharmaceutical stocks, with the reality that they're going to have a pro-growth administration coming. Lastly, we thought the market rebounded due to the election wasn't really contested. We don't know what the market will look like for the future, but let's look at some scenarios really quick. A bullish case. Go Chicago Bulls, go Cubs. All right, I'll give you the bullish case. Can this be bullish bias be maintained? Short answer, as my friend Lance would say, yes, but there's a big asterisk next to it. A bullish case boils down to, now that we know who the president's going to be and who's going to be running Congress and the Senate, will the market shift to growth? Market participants have had a lot of cash on the sideline. We expect that to go back in the stocks. Money managers underexposed to equity market will also try to beat their benchmarks to secure their bonuses this year. Big banks, major oil companies, biotech companies, major drug companies, major pharmaceutical companies, all with super large cash holdings held overseas, are expected to repatriate or bring that money back to the U.S. in expectation of tax leniency. The reason this is all a bullish case also is we're in a very historical earnings season. Now the asterisk. You know, what is the big old Chicago Cub in the room, or the big elephant in the room, but we're going to use the Cubs today. Long-term rates. That's the asterisk. On the night of the election, the 10-year dropped to 1.72%. This was a bearish move, not a bullish, since price and yield move inversely in the Treasury market. Also, another factor, the GOP-led Congress and Senate and a pro-growth Trump administration also spells more debt, more budget deficit, and a huge stimulus package. What does this all mean? Most importantly, the Chicago Cubs won the World Series for the first time in 108 years. We are now the lovable winners forever. Shout out to my friends and family in Chicago, Clover Sports Bar. The political pundits and market pundits were all losers this week. They were all wrong. They all thought that Hillary was a shut and done case, but they were completely wrong. Don't be a loser. These guys on TV don't know everything and are wrong all the time. Be smart, continue to save and protect your income. Seek out good, reliable financial advice, and drop the superstition. I want you guys to have a great week and give a Chicago Cubs fan a hug. Have a good week.